Nalu FM Finance Podcast. Insight into the financial markets.
When that future recovery is unknown, when the timeline to that future recovery is unknown, and when many of the risks involved in getting there are unknown, that creates, opportunities for value creation.
This podcast is powered by Vesta, the engine behind active management. Vesta is a Switzerland-based fintech startup that provides software for issuers of actively managed certificates to automate their value chain fully. Visit Vesta, VESTR.com to schedule a meeting with an expert and to learn more about Vesta.
I'm here with Andrew Glantz, Chief Strategy Officer of Exclaim. Thank you, Andrew, for joining me. I'm very excited to speak to you today, particularly as we're going to talk about something what I consider an alternative investment. But maybe let's start with what actually is Exclaim and what inspired the founding of Exclaim.
First of all, Stefan, it's great to be here, and I'm glad that we had this opportunity. Thank you very much for having me on. Exclaim is a platform and a brokerage for trading in bankruptcy claims and other distressed debt. We operate the first and largest bankruptcy claims trading marketplace in the United States and globally. We have both a marketplace, which allows buyers and sellers to join, find each other, and transact very seamlessly without significant input from lawyers or other third parties where the transaction costs may not support a trade. And also, we have a brokerage desk that sits on top of that, which allows us to do highly bespoke and very complex deals for much larger creditors. The marketplace and brokerage was founded in order to transform an industry that has been largely opaque and somewhat asymmetric for the 50 plus years that it's been active since the enactment of the Bankruptcy Code in the United States in the 70s. And claims trading has been around for centuries. So this is sort of the next generation for this new asset class.
Now, you said you're one of the largest one, but also how large overall is actually the market of bankruptcy claims? Is there?
Sure. So in the U.S. market, U.S. market is important because when we talk about claims trading, we're generally talking about claims against companies that are in an insolvency proceeding or in a bankruptcy in the United States, which would be a Chapter 11 or Chapter 7 bankruptcy. So the market does evolve based on what companies are in bankruptcy, the extent of the claims, and the extent of the buyers. But in a robust year, you might see $40 to $50 billion worth of claims trade in Chapter 11 cases in the United States.
Well, and you mentioned that you basically try to build a centralized marketplace. What challenges did you sort of had to face in aggregating all that in the US?
The biggest challenge, I think, in the United States or globally for holders of these claims is education. Most of them find themselves in a bankruptcy situation where they weren't exactly expecting the debtor to file. They weren't expecting the person or company that owes them money to pull the trigger, end up in a court-approved process, and all of a sudden they find themselves holding a claim. They're owed $100,000, $3 million, $50 million from some contract or other service or other relationship that they have. Maybe it's a litigation claim against this entity in bankruptcy. And all of a sudden, they've got to figure out, how am I going to get paid? What am I going to get out of this case? What do I need to do to preserve my rights? What actions, can I take now? And how long might it take? But at that point in time, at the beginning of a case, most of these people, or companies, they don't even know that there's a solution out there to get liquidity. And that's the biggest challenge, is just education.
Yeah. On one hand, there's the people who never knew they could actually sell their claim and don't have to wait till it finally settles for whatever, 20 or 30 cents on the dollar. And on the other hand, obviously, you have the people who are willing to buy these claims and see it as a potential investment. Maybe we'll go into that, how best to approach bankruptcy investment. What is sort of the benefits for investors? I mean, I consider them quite uncorrelated, besides maybe in the macro sense on the interest rate side, but otherwise shouldn't move with commodity prices or equity prices.
Yeah, that's a primary appeal of claims trading for the investor. This is an asset that tends to be quite pulled away from the S&P 500 or the bond markets. This is going to be characterized by various types of risk, which we can get into. But the appeal of bankruptcy claim is you're stepping into an asset that by default you're buying at a discount. The seller is going to sell it to you at a price that represents the theoretical risk-adjusted present value of an expected future recovery. And when that future recovery is unknown, when the timeline to that future recovery is unknown, and when many of the risks involved in getting there are unknown, that creates a wide spread in potential viewpoints as to what that thing is actually worth, what that intangible right to recovery is worth, which leads to opportunities for value creation.
I would say some of the unknowns can be quantified, as said, but particularly if you spend more research on it, if you're willing to put the effort into it.
The parties that invest in these claims, it's quite wide ranging. You have the large asset managers that have their own distressed desks that invest in these types of assets. You have large investment banks that have proprietary trading operations that buy claims. You have specialty claim investors. You have hedge funds. You have family offices and high net worth individuals. And depending on how long you've been in the market and you've been in these processes, you start to get a sense for what is the cost of the lawyers going to be if this case runs for X number of years? Or here are the legal issues present in the case. Do I think this is going to be a 6-month timeline or an 18-month timeline or a 5-year timeline?
What is sort of the expected length on these trades usually when investors are willing to get involved?
There's obviously a long tail, but most the average bankruptcy takes something around 2.5 years to resolve itself. So from commencement to actually payment. So that's a long time to wait, particularly if the creditor themselves needs the cash. That obviously varies depending on the complexity of the case, whether there's an agreement in place among creditors at the time of filing or not. These are all factors that will impact recoveries.
Okay. What are sort of the risks that you should consider when looking at bankruptcy claims as an investment?
I like to think of this as the sort of the 4 C's. So you have case risk, claim risk, counterparty risk, and company risk. So we can talk about each of these. So case risk, we've just talked about this, right? So what is the recovery going to be at the end of the day? If I'm owed $100,000, how long is it going to take, and what am I going to get? Am I getting 20 cents, 30 cents, 40 cents? That's really just a question of what are the assets, what are the liabilities, and how long and how difficult is it going to be to monetize whatever illiquid assets are in the estate, whether it's real estate or intellectual property or other rights. And then it also is impacted by whether there are disputes between creditor groups. I may have one type of interest, another creditor group may have another type of interest, and there may be intra-creditor fighting over how the waterfall will actually work in the bankruptcy. That's going to impact the case risk. And then the primary consideration becomes cost of capital, which is what's my as a creditor, if I own the claim, what's my cost of capital of sitting there and waiting to get a recovery versus the buyers. So that's case risk. Claim risk is really about, I'm asserting my claim. I'm saying I'm owed $100,000. I'm saying I'm owed 2.5 million, right? Am I right? Am I going to get the claim recognized by the debtor in that amount? Or does the debtor have a different view? Can I substantiate the claim itself? Is it based on receipts of invoices? Is it based on a litigation claim where I have a judgment from a court, or is it not a liquidated claim yet? So there are often disputes between the debtor and the creditor over how much the claim is actually going to be allowed for. Again, that's not what you're going to recover. That's just the notional amount of the claim based on, that you're using to then calculate the recovery. So that's another sort of second part of risk. And there can be significant litigation costs in getting to that allowed amount with the court. And sometimes that becomes really the nature of the bet. So you've got case risk, you've got claim risk, then you've got counterparty risk. So if I am the buyer and I'm purchasing a claim from you, and most cases, I purchase the claim. After I pay you some sort of consideration for that claim, I'm going to file a notice with the court, and I'm going to tell the court, I've just purchased the claim from Stefan. Now you got to pay me. I'm the buyer. I bought the claim. You got to pay me. Here's my address. Here's my bank account. 99% of the time, I'm going to get paid. But there's that 1% of the time where the debtor makes a mistake or the notice doesn't get docketed in time, and you end up getting the payment instead of me. And this is one of the things that we want to fix.
And then I have to hand it over to you, okay?
And you've got to hand it over to me. Now, this is one of the things that we can fix as we continue to improve the technology behind trading and make the marketplace more efficient. But a fact of trading today, and a fact of trading for the last 40, 50 years, has been that you have to consider the risk that if Stefan gets the payment instead of Andrew, well, I've got to come and chase you. Yeah. So are you a large corporation based in the same jurisdiction where the court is, where I can easily go and attach your assets if I need to get the money back? Or are you an individual in some far-flung jurisdiction who has no plans of coming to the United States? And if they get the payment, well, good luck going and getting it. So that's going to impact, some of the sort of buyer's confidence about the trade as well. And then occasionally you have a situation where the actual transaction, historically, the basic transaction is simply, I'm paying you cash today at a discount, and I get the rest of the claim. And there is another, there's other arrangements that we negotiate all the time, which could be, I'm paying you some cash today, and then depending on the extent to which your claim is allowed or the size of the recovery, I'm going to pay you some cash tomorrow. And if so you have a holdback structure like that, then it goes the other way around. And the seller of the claim starts saying, well, what's the counterparty risk of my buyer? Are they some individual somewhere, or is this an established hedge fund that's, going to treat me right if and when I'm owed more money at the end of the day? So that's your counterparty risk. And then the last one that I think about is you can call company risk, you can call it cyclical risk, you can call it macroeconomic risk. This is the risk that the actual underlying factors that dictate what the asset prices of the company are, what the value of those assets are, may be fluctuating. Who are the individuals that are going to be leading this company during the bankruptcy, coming out of the bankruptcy? What happens with the largest customers of that company? Are they going to go away during the bankruptcy, or are they going to stick out and wait for the other side and continue to keep the value in the estate? So these are all sort of, market cycle kind of questions that impact at a higher level than, let's say, the case risk, what that end of day recovery might be.
Now, in our pre-call, when we chatted first, we talked about that X-Claim particularly had been involved quite a bit with cryptocurrency bankruptcy claims. Maybe you can a little bit apply what you just said to one of probably the most known and knowledgeable case to everybody with FTX, basically.
Sure, absolutely. So, in terms of the risk that we just talked about, the case risk of these crypto bankruptcies, and let's focus on FTX, was really around what's even there to monetize and distribute. So at the beginning of the case, the professionals that came in to manage the company didn't even know what assets existed. It took them months before they were actually able to prepare basic disclosures that you see in most bankruptcy cases on day one, and provide that to the general public to say, this is actually what's in the box here that we might be able to use to monetize. And those assets contained everything from crypto tokens. It include cash, stable coins, ownership of various businesses, investments in venture capital positions, a whole real estate.
That's the last C that you mentioned, basically.
That's right. So so this is all sort of, I think about this as case risk of sort of what are you going to recover at the end of the day? And so the first question is, what are the assets? Second question is, what are the liabilities? And, from a buyer's perspective, coming in and saying, I'm bidding on these assets, nobody even knew at the beginning how many customers there were. What's the total number of customer claims, right? How many billions of dollars are owed? You also had complexity of, you had the Alameda, which was the trading unit, and then you had FTX. There was a question about, what funds had moved from one to the other. Do customers actually have the right to their assets, or are they just going to have an unsecured claim? So if I have a claim if my account was full of Bitcoin and your account was full of dollars, if Bitcoin increases, does my claim go up or does my claim go up and down just like yours. And so the bankruptcy code says, everything's fixed as of the petition date, but there were a lot of legal questions that created a fair bit of uncertainty. And this is all sort of part of the case risk as well. And then there was the big question about what are the assets and can they satisfy the liabilities? Now, as the case went on, we saw that more and more of these assets were uncovered and located. We saw that the debtors were able to identify that they were sitting on some pretty amazing investments that had exposure to SpaceX, Anthropic, which is one of the largest AI chat platforms that's out there with Claude, and they had a substantial investment in Solana, which has just increased tremendously over the period from November 11, 2022, all the way through till today. So those assets alone had a huge impact in delivering outsized returns relative to expectations at the beginning of the case.
I think originally the FTX claim, I think I saw that somewhere, or maybe it was even on your historical pricing, when originally from 10-fold up over the time from November till today.
Yeah, we have buyers that purchased claims through us in the single digits back in January of 2023, and those claims are now trading 134 cents on the dollar, 135 cents on the dollar. So we see a pretty unbelievable return profile, and that's due. You really don't see that too often in bankruptcy cases. There's other examples where you have a commodity-driven case. So, oil and gas reserves, for example, where oil prices are going up and down, and that's completely changing whether one class of creditors is what we call in the money, they're going to recover something, or out of the money, meaning they're getting nothing. And so that's just been a huge dynamic of this case.
Maybe one question as well on FTX particularly, because you said there was nobody knew what assets were there and where are they if they were there. Is it more difficult to track crypto versus, let's say, a ship or a house?
If we think about it at a very high level, all crypto transactions are going to be on a public blockchain. So that's something that anyone can look at, review, can validate. So from that perspective, crypto is certainly easier to track as an official record. The challenge of crypto is oftentimes anonymity. It's sometimes much harder to figure out whose crypto is moving and who did it move from and who did it move to. And when you deal with a situation where the professionals being brought in to manage these cases have no experience in crypto, that creates its own complexities of maybe it's immutable, maybe it's on the record, but I got to go hire some expert to tell me how to trace this stuff. I'm a fish out of water. So there was a little bit of that in the beginning of these cases. Other you mentioned a ship. There's famous examples of hedge funds going and seizing ships that were maybe collateral or assets owned by various countries to satisfy sovereign debt. There are ship manifests. There's a lot more legwork required to physically go around and find some of these physical assets to then go and seize them. That's just a different kind of work, but they're equally difficult sometimes to go and track down crypto assets if they've been put through mixers and other ways to obfuscate the actual direction where they've been.
And going forward, where do you sort of think is bankruptcy claims? Where's this business going, particularly with a view how you want to position X claim?
Great question. So, crypto bankruptcies and crypto bankruptcy claims has created this amazing opportunity for the bankruptcy claims trading industry because we improved our business and sharpened our tools such that we can serve creditors in non-crypto cases more efficiently today than we could 2.5 years ago. And the entire market has evolved, I would say probably fast forwarded about a decade in terms of how we think about claims trading from a technology perspective, a documentation perspective, a negotiating dynamic. And we're seeing that already as our involvement has really increased, not only across other bankruptcy cases, but we've been able to expand our influence not only among small, tiny claims that may not have traded at all before, but now we're also competing head to head with the larger Wall Street firms on trading of $50 million plus, $60 million plus, $100 million plus claims, because those claims also see the value of coming through a platform like ours, where we have transparent pricing, where we have the most buyers, where we have internal knowledge about how the trading works. And so that's been a huge dynamic where the whole market has shifted in favor of creditors, where you now have more creditor empowerment.
Now, maybe some personal questions for you. Thank you, Andrew, for the insight here. So what actually drives you? I mean, you sound very passionate about what you're doing here, but maybe also you can tell us something about yourself that most people don't know.
So, my background prior to coming to Xclaim, I was a management consultant for a number of years. I worked in sustainable energy for a number of years. I trained as a bankruptcy attorney, and I practiced bankruptcy law for about 8 years at 2 different global law firms, and also on a distressed desk at a large asset manager. So, one of the things that really gets me going is the ability to bring together all of these disparate parts of my career and my different experiences to help solve problems. So really marrying the business and the legal background to do what we do at Xclaim, both in terms of growing the business, but also helping our buyers and sellers think really strategically about crafting creative deals and structuring. And so that's just been that's something that really excites me. And my role at Xclaim has been great because, as the chief strategy officer, I have the ability to influence trading, marketing, business development, product development, overall strategic direction for the firm. And so you've been able to kind of have my hands in a bit of everything.
I like it. Next question then is, what is your definition of success?
I think my definition of success is only doing the things that you want to be doing. And I joke around with my wife that I'm already semi-retired because even though I'm pretty young, I really, most days I wake up in the morning and I'm just focused on the things that I find interesting. And that I find exciting, and that give me the opportunity to help other people, whether it's our buyers or our sellers. For me, that's just it's mostly enjoyment. Every job has its pain points, but I consider success to be exactly that.
Last question, personally about you, what is on the top of your current music playlist?
Lately, I've been listening to a lot of Busty and the Bass, which is a group out of Canada that I just saw recently in Brooklyn with a very close childhood friend of mine. So that's been one. It's sort of it's one of these genreless groups that plays with funk and jazz and hip hop and kind of brings everything together. So that's one that's on my repeat playlist lately.
Now, if anybody liked what they heard and they would like to find out a bit more or get in contact with you, what is the best way to reach you?
Well, you can certainly explore Xclaim's website, where we list trading prices, active trading prices of markets, where you can really easily, whether you're a high net worth individual or a family office, you can really easily register to trade claims with a click of a button. It's a very, very simple process, and that's at www.x-claim.com. If you have a claim, you can certainly come and check us out there as well. For me personally, you can find me on LinkedIn, Andrew Glantz, and you can also just contact me directly at my Xclaim email, which is andrew@x-claim.com.
Fantastic. Thank you, Andrew. Much appreciated.
Thanks so much. It's been a pleasure to be on.
Nalu FM Finance Podcast. Insight into the financial markets.
This podcast is powered by Vesta, the engine behind active management. Vesta is a Switzerland-based fintech startup that provides software for issuers of actively managed certificates to automate their value chain fully. Visit Vesta, VESTR.com to schedule a meeting with an expert and to learn more about Vesta.